Okay. I want to welcome everybody to Tax Talk with Corey. As you may have guessed, my name is Corey. I am with the PennWest Clarion Small Business Development Center. That's kind of on the western side of Pennsylvania. Some of you are going to be near me. Others of you are going to be across the state of Pennsylvania, maybe on the eastern side, and that's okay. The information that we're going to talk about today should be helpful to all of you. Some of you are also returning visitors, and I appreciate you coming back. I've heard that each time you come, you'll try to learn something new, and that's what I hope to be able to portray to all of you. Um, and some of you are brand new. So if you are brand new to this session, I need to explain what this session is right away so you can make a choice as to whether to stick around and hang out with us for an hour or whether to zip on out and go somewhere else. So this is not a true webinar as you're used to. What this is a brief time period in this hour where I'm going to talk about the SBDC, kind of like the intro to any webinar. And then I'm going to talk about a small tax tip dealing with rental income. That'll only take a few minutes, all in all, introduction and tax tip, 10 to 15 minutes. And then we're going to open this up for questions and answers. So hopefully some of you have some tax questions you'd like to try to run by me. We try to keep the questions to business related, but if some personal slides in, I'll be glad to try to answer those questions as well. I am an accountant by education and by trade, so I hope that I can answer your tax related questions. And then that's how we run this tax talk is we allow you to ask your questions and me to answer those for you. Before we get started, I do want to give a small disclaimer that you should have seen when you registered for this tax talk. So anyhow, I'm just going to read it to you. It says, any tax advice reflects our professional judgment based on our understanding of the facts provided to us and on current tax law. The SBDC is not responsible for misinformation as this is a service offered at no charge to entrepreneurs and business owners. So our recommendation is if you hear something today that you want to dive deeper into, then we reach out to our local SBDC consultant. We have 15 SBDCs across the state of Pennsylvania, and also reach out to your own accountant or your own attorney if that is necessary. Okay, let me just give you a brief overview of the SBDC. This is, consistent across the state of Pennsylvania. Well, we're an educational organization, so we're here to help small businesses start, grow, and prosper. We use, research and information and knowledge and tools to be able to help our small businesses and our entrepreneurs. We offer one-on-one business consulting. So that means that you meet with a consultant one-on-one by telephone, by email, by video, and by in person. All of those are options. Our services are offered at no charge, thanks to the federal government through the Small Business Administration, thanks to the state of Pennsylvania through the DCED PrEP program, and also thanks to each one of our universities that we're located in. They make it possible for us to be able to offer our services to you at no charge in order to help you with your business. We offer lots of trainings. In case you haven't tapped into our trainings yet, definitely check out that website at the bottom that says pasbdc.org. All of the SBDCs across Pennsylvania, their training can be found at that website. Most of them are webinars, and most of them are offered at no charge. There can be some with a fee, and there can be some in person. Totally optional what type of trainings that you want to attend. Take a look at this business life cycle from the introduction of a business to the growth stage of a business, and then the maturity, maybe the decline stage. And then when you get into that decline stage, we want to look at, renewing or coming up with something new in our business to help us grow again. And just take a look at all those bubbles that you see across there. These are all different types of bubbles that the SBDC can help you out with. So you may need one bubble today, and maybe next year you need a different bubble, and maybe even 15 years from now you need another bubble that's there. Or you may utilize 5 of these bubbles kind of all at the same time. And so just take a look at that. Take a screenshot if you want to, so that when you're talking to your SBDC consultant, you can ask them for more information regarding one of these bubbles. We also have some special programs. These special programs are still offered at no charge. So don't let the word special make you think you got to pay for it. Take a look at that piece of the pie that's coming out right now. That is our product development services. So if you have a new invention, say, and you need help getting it to the market, that involves, patent research and such, and that helps, maybe coming up with a prototype, and then is there a market need for it? There's a whole array of services there that the SBDCs and our partners can help you out with. Going clockwise, you have government contracting and international sales. There's a huge market out there in the world. Do you have a type of business that can utilize and sell to those different markets? We can help you out with that. If you're a business that has to deal with environmental regulations, we have this EMAP program that will help you understand certain environmental regulations that you have to comply with. They also will help you with applications that you might have to fill out, and they can also help come up with certain calculations that you need. And then, of course, if it's something they can't quite help with, they have many connections out there in the environmental arena to be able to refer you to. Continuing on, we have this WEDNet program. So if you're in certain industries, specifically like manufacturing, you can tap into some workforce grant money to help pay for training of your employees. So definitely check out the WEDNet program. And then last but not least, what we call these centers of excellence, the centers of excellence for agriculture. So anywhere from the farmer who plants the product all the way up to, say, the restaurant or the canning company and the retail. That's all in the agriculture industry. And so we have specialties there. We have some specialty consultants as well. We have general ag consultant, we have a restaurant consultant, and we have a farmer consultant. So lots of resources there in that center of excellence. And then also the SEO, which is search engine optimization. So all of us better have a presence online. And with that presence online, we can help you analyze, are you being found? Are you easily able to be found online? And if so, if there's any improvements that's needed, we can help you see what those improvements are. Here's our SBDCs across the state of Pennsylvania. As I mentioned, there are 15 of them. Take a screenshot of that. If you're not sure what SBDC is yours, ultimately you just need to find where you're at in Pennsylvania, look at the number, find your SBDC, make sure you reach out to them if you're not already in contact with them. Okay, so I edited this and said now on with the Q&A, but I still haven't talked about our tax tip. So our tax tip today is dealing with, there we go, is dealing with rental income. So of course, rental income can be commercial real estate that you might be renting out to someone, or it might be residential real estate, and you're renting that to a family or to an individual. And whether you're renting a commercial space to somebody or a residential space to somebody, you have to claim that income. And that income makes you, in a way, kind of like a business, because as a business owner, we have to record our income and we have to track our expenses so that we can subtract away from the income. We don't owe so much money to the government because we have these expenses. So if you, let's say you're a resident, you're renting out residential income, you're going to track different types of expenses, and those will subtract from your income, ultimately saving you from paying taxes. One item of interest is what we call depreciation, and depreciation is like normally when you purchase a larger asset, an asset that normally has a useful life of more than 12 months, and the IRS would say that asset is to be written off over a period of time. So a building, residential building, you're looking at like 20, what is it, 27 and a half years now is what it would get written off over. It gets, divided up by that many years, and that becomes an expense for your business. So any capital improvements you make, such as your roof, your siding, new hot water heater, new furnaces, carpeting, things like that, all are going to get written off over a certain period of time on your tax return. But don't forget about the small expenses as well. any mileage that you have to go to your commercial real estate site or your residential real estate site, any mileage that you have from your home office or from your building office to that rental site, that is able to be written off. And don't forget about any of the supplies that you might use to clean the place and such. When you go in there to clean it after they move out, make sure you write off of those different expenses as well. But of course, be careful trying to hide personal expenses in there. Businesses, entrepreneurs sometimes like to try to do that. Please be careful that we don't you don't want um, to be commingling personal and business. If you get involved in an audit from the IRS or Pennsylvania, then if they see commingling, what happens is they end up disallowing a lot of business expenses because they don't know what is and what is not personal versus business. One last thing I want to talk about, even though there's so much to talk about, is your security deposit. So when you receive a security deposit from somebody, you do not record that as income. You're going to record that as a liability. And maybe you'll call it a securities deposit payable. And so that sits on what we call your balance sheet as a liability for as long as that tenant is staying at that location. Once that tenant moves out, then you have a choice of either giving it back, and if you give it back, it just disappears from that liability and you pay it back. There's no income being claimed, there's no expenses being claimed when you receive that deposit and when you give that deposit back. However, if you do keep the deposit, which a lot of times happens because you have to do repairs and such to the building, and therefore you keep that security deposit, you're going to claim that as income, either normally like an other income, not at the very top, more like on an income statement or a profit and a loss statement, not so much at the top. It would normally show up at the bottom as other income. And then there should be corresponding expenses with that. So you would then, if you're having to buy new carpeting or fix the wall or buy new lighting, or pay someone to come in to scrub the floors, those are different types of like repairs and maintenance maybe, or even some capital improvements where that depreciation comes into play. But either way, whatever you spend that security deposit on, that will become an expense on your tax return. So it's ultimately a wash. You claimed it as other income, but you wrote it off, and it just zeroes itself out. So again, there's a lot of information I could cover dealing with rentals. Maybe you have some questions of your own, and I don't want to take up the whole hour with me speaking about something when the idea is to let you speak. So I see that we have about 22 people in here right now, and all of you should have the ability to use the chat button to talk about to tell me what your question is, and then I'll try to answer it. If you have a microphone, I will give you the opportunity to unmute yourself. I kind of kept a preliminary list of those that came in first, to try to give them first chance at asking questions. And then once I get through this list, then I'll kind of open it up for everybody else as well. But definitely use the chat option, because if I don't hear from somebody that I'm allowing to unmute, either means they don't have a microphone or they stepped away from this session. And therefore, while we're waiting for them, then I come into the chat there. Okay. So let me open up my chat and my attendee list. Okay. So, Judy, you were first on my list, Judy, and you say no questions, and that's okay. I have a lot of people that come here just to listen, and then they learned from other people's questions. So next up, I have Zachary. Let's see, Zachary, where you're at down here. I'm going to allow you to talk. Let me know if you have any questions, Zach. Okay, so if Zach unmutes himself, great. But if not, right now I'm going to take a look at one of the chats. As I said, that's what I do here. So Kate is saying, what if you have some commingling going on. How to rectify while moving forward with better practices. Absolutely. So, and that's a lot of times what we say is moving forward. Let's make sure we fix this issue. Make sure you have separate checking accounts, separate bank accounts. If you're operating out of one bank account, then you're definitely commingling, right? So have a separate bank account, have a separate credit card, even if it's not, because every business is some are really small, some are really big, So for you that are really small, maybe you don't have a true business credit card, then use one of your personal credit cards, but only use it for the rental or for your business in general, whatever it is that you have. Um, have a personal credit card for personal purchases. Have another personal card maybe for just business. And if sometimes accidents happen and you cross over, because you forgot one card at home or you pulled out the wrong card. I have that in my wallet where my personal and my business card are like literally side by side. So it depends which one I pull out. Um, and therefore, if I make a mistake like that, then I just make sure that I personally reimburse the business, or if I use the business card, then or if I use the personal card for the business, and make sure the reimbursement happens the other direction as well, so we don't have issues with that. So I think those are two best practices, or better practices moving forward, is to make sure you have these separate accounts. Okay, Zach, you have any questions? I'm not hearing you, Zach. Let's
Hello.
move. Oh, hey, how you doing, Zach?
Hi. Sorry. No, I'm just here to listen. I don't have any questions. Thank you though.
Absolutely, that's cool. Okay. And we do this every month. So for those of you that are brand new, you're going to get used to how this works. And when you come back next month, maybe you'll have some more questions. And of course, if you hear something talked about today, please reach out to your local SBDC consultant after today. You don't have to wait a month to talk to somebody. You can talk to your consultant right away. Okay. Oh, there I see Zach down below mentioned that. Okay, so Paul Anderson. Now let me find Paul. Allow you to talk. Paul, if you're able to unmute yourself, feel free to
Hey, Corey. I
ask a
just
question.
threw mine into the host panelist thing there, but
Oh,
in
there
terms
it
of
is.
ghost income, if I choose not to take rental income as pass through and pay taxes from my LLC, or pass through the LLC on my own income tax, but instead like pay down the mortgage faster with that, are there any additional tax implications or anything there, or write-offs that I'm not thinking of?
Okay. Okay, so I must say I'm unfamiliar with that term of ghost income. That's a new one to me. Um, so if somebody's paying you rent, you're not wanting to claim it as income, rather you're wanting to use it to pay down your mortgage. Is that what you're saying?
Yeah, and my understanding of ghost income is basically if my LLC, makes profit through the rent, and I choose not to take that out that year, but roll it back into the company. That's my understanding of ghost income. I still owe taxes on that as the LLC owner, is my understanding, even though I didn't take it out. But I don't know if maybe there's deductions or something else taking into account by paying down that mortgage as well with those funds.
Okay, so are you saying, like, this is what I'm thinking here. So, um, do you own a building that your LLC is located in?
No, this would be like, rental income. If my LLC has three properties and, at the end of the year, I've got 10,000 in profit, instead of taking that out, for my own personal income, I'm going to roll it into, paying down those mortgages faster. My understanding is I still owe personal income tax on that because it's profit to my LLC, but I didn't know if there were additional tax, write-offs or implications by paying down a mortgage, that already has some sort of tax benefits there as well.
Right. Okay. I'm under, I think I'm following you there. So, new terminology for me. I'll definitely do some more research into it. But I mean, once we take out those words and talk about what's going on, I think I understand what you're saying. So yeah, your LLC collects income, and you have your income minus all your different expenses. As part of your mortgage, you have interest expense that you're writing off. You also have your principal or your depreciation on those buildings that you're renting out. So that depreciation is the expense for your business. After all of your expenses, you're left with a profit at the end of the year. And if it's a $10,000 profit, as you said, you'll have to pay taxes on that. Now, the question is there anything else to subtract away from that? I mean, I would just go back to saying, no, it's just whatever those ordinary expenses are. If you're paying more on your mortgage, then that means you're paying more on the principal. Not so much, I would hope you're not paying extra on the interest. I want you to pay down your principal if you're making more payments on it. Um, but that's not an additional, and to all my understanding with this ghost income kind of terminology, there'd be no additional expenses there because that is just truly based on depreciation. It's not based on how much you literally pay each year on your mortgage principal. So in a matter of fact, you could pay off that mortgage in 10 years, but that building won't be fully depreciated for many more years beyond that, and you can't take that depreciation faster. You have to spread it out over that number of years. And so you might get it paid off early, but you still have that expense much longer. I hope that helps a little bit.
Yes, thank you.
Okay. Let's see here. Get back up here. We have some the questions, no questions. Okay, so Maricela, I hope I pronounced that okay. You asked where did you say the deposits would go on the balance sheet? So yeah, it's a liability. So it would show up on your liability side. You could what I say you want to call it something like security deposits payable. So a current liability on your balance sheet. And so when you receive cash for your security deposit, that cash goes into your bank account. That would increase your cash on your balance sheet, which is an asset. And then a balance sheet always has to have two sides of balancing to it. So if your cash asset increases, then this security deposits payable, a liability increases. Then if you give that security deposit back, that journal entry would just flip-flop, which would mean that you decrease the liability and you decrease the asset. And so they both go down. However, again, if you keep the security deposit, then remember it's already in your bank account, right? And it's in this liability, okay? Now we're going to decrease that liability, which would be a debit. If we want to talk debits and credits, that would be a debit. Your credit, I just had it in my brain there. Your credit would be income, other income. So that's one journal entry, debit the liability, credit other income. Now we need to record your expenses. So your expenses, you would end up debiting your expense, whatever that expense might be, such as repairs and maintenance. And then the other side, the credit, would be your cash account. So that cash sat in there for a long time until you finally pay for your repairs and maintenance. Then it finally comes out of your cash account. That's a really good question. I hope if you know debits and credits, hopefully you followed that. If you didn't, I tried to give that to you a little earlier on, like just on what side of the balance sheet it happens. Good question. Okay, let's see here. So Becky is asking, at what point does a contract instructor become an employee? How do I account for that in taxes? So the difference between an employee and a contractor is a contractor is going to use their own supplies, their own expertise. If you are teaching a webinar or an in-person session, somebody's going to tell you, and it may be your contractor, the person that's hiring you. They may be telling you where to go to um, to speak and at what time to speak. They can do that, okay? But then you're either going to use the tools and the supplies, such as a projector that the event provides, but you're gonna maybe bring in your own computer or at least your own flash drive with your own PowerPoint presentation on there that you've already created. So when would you as a contract instructor become an employee? And I'm thinking of like doing trainings like the webinars and in-person trainings. I think you could be a contract instructor almost all the time. Now, if you went to work for a school, okay, that's going to be different, right? Because you're going to go into their building, you're going to use their building, you're going to use their equipment, you're going to use their supplies. They're going to give you even more designation of when to be there, when to leave, and how to teach it. Therefore, I could see that easily being an employee versus a contractor. And so even substitute teachers, substitute instructors, if you want to say, they're employees too. They get paychecks from the school as well. Okay. Happy Thanksgiving, Holly. Good to know that you're here again. Okay. Kate. Kate is saying, rectifying the past books then looks like doing reimbursements and making those clear. Okay, so that was going along with the commingling that might be happening and how to rectify while moving forward with better practices. So let me come back down here, Kate. I'm going to unmute you if you have a microphone, and maybe you can even fill in some blanks here for me. Okay, Kate, there you go. How you doing, Kate?
Hi, yes, good morning. Yeah, so I guess I am formalizing a business and trying to, I could start from day one today, but I could also, do a tax year. And so I'm just like household expenses. This is a building that I live in and that I've begun to use parts of for rental. So that is the situation. And so that's why I'm asking this particular question. It's kind of like if I just make everything clear enough, is that good enough? Or should I sort of refocus on, choosing a start date, an official kind of start date of operations that does not include kind of when I was slapping these together.
Okay. Okay. So let's first talk about the official start date. I know someone that just started their business on Saturday, and however, they had expenses leading up to that precise start date. So those expenses can still be written off and be written off as startup costs. There's some rules around that. So some startup costs, as long as it's under a certain dollar amount, I'd have to look up that dollar amount again, maybe like 5,000. As long as it's under that, you can write it off in that year. But once it gets above a threshold, then it has to be what we call capitalized, which would then be like written off over a number of years. And so you're ultimately going to have to decide like when did you really start claiming that income, or when did you start earning that income? That kind of can become the start date. Now, when you say that you have part of your home being rented out, is that for like, do you have an apartment in your house, or what's going on there?
Yeah, it's a small multi-unit building with 4 separate units.
Okay.
And it's a little bit more, it's slightly more complicated in the sense that for this particular property, the zoning is such that I can operate a bed and breakfast, a short-term rental kind of operation here, versus a kind of standard apartment building. And so that's just my situation, and part of the kind of vagary
Okay,
that
interesting.
I'm kind of considering this. I'm dragging my feet because I'm considering, do I do, this kind of more creative and potentially more difficult thing of doing
Mhm.
short-term rental. But
Okay.
anyway,
Okay, good. Well, definitely you should be working with an SBDC consultant if you're not already, but there's different ways to divide up. I mean, one is if you have different utility meters, that makes it easy to divide up utilities. Um, if you don't have separate utility meters for the different areas of the building, the different units, um, then you would look at square footage, so total square footage of the whole place, and figure out the square footage of each unit, and specifically, mostly, taking out the square footage of of where you live at, and then you can write off the expenses of those other units. Now,
this is where the commingling comes in. This is where the gray area is. That it would be much more it would be much more simple to conceptualize all of this if I did not exist inside of the project.
yes, yes.
Like rent a garage somewhere and exist there.
Right, right. And that is absolutely true. I mean, when you do have, you're in the same spot, it makes it harder because as I was getting ready to say was, the other three units could use way more electric than what you may use, or gas or so forth than what you may use. But how do you divide that up? Overall, the easiest way is to do it by square footage. Could it get a little more complicated? Could you figure out a different way to do it? Absolutely. And as long as it's well documented and well followed, then if you were to be audited by the IRS or Pennsylvania, then as long as you show them, this is how I've been dividing up my utilities and so forth. As long as you got it documented and they can do the calculations and it shows that you've been following what you're showing them, then they normally wouldn't question it. So what I would strongly suggest is working with a consultant or an accountant, either one, both of them if you want, to really dive deep into this and figure it out. I don't think it's as hard as maybe what you're thinking, or maybe I'm not thinking it's as hard as what it is. But sometimes people will stress over this and
Yeah. Yeah.
and think that it's more complicated than it is. But from an accounting standpoint, I think I could work this out for you pretty easy. Okay. So I don't know where you're located at, Kate, but make sure you reach out to an SBDC consultant if you haven't already and ask them, can you please handhold me, help me through
Yeah.
this a little
I
bit?
agree. I thank you for what you said. The idea of that it's like somehow more complicated than I'm thinking is I just need somebody else to step through the math with me. And it sounds like as long as I show things, I show my work and follow my own rules. Okay, thank you. I appreciate that.
You're welcome. Absolutely. Okay, Antonio, let me unmute you. If you have a microphone, Antonio Sanchez, feel free to unmute yourself and ask a question. Oops, I see here. Okay. Which is better, a tax credit or a tax deduction? Antonio asked that. So, um, what is better, a tax credit or a deduction? Normally, well, depends what you're looking at it. I mean, they're all kind of subtractions from your income, right? But normally a credit is better. A credit is normally a a a refund of money. So if you're eligible for a $1,000 credit, you get $1,000 check, okay? Or it's $1,000 like subtracted away from what you owe to the government. So it's a dollar for dollar. Whereas a deduction is normally what we call above the line. So a deduction above the line, above the tax line where the tax is calculated. And so if you get a deduction there of $1,000, you're only actually going to get a percentage of that as a deduction, based, once the taxes are calculated. So normally credit is better than deduction. Good question. That was a good one. Let's see here. Okay. Kim is saying, looking forward to the use of AI and understanding doing my taxes. Yeah, I think, I'm not sure if maybe you saw something for the future, but I think that is a future session of ours that we have coming up is talking about AI and how we can use AI in businesses. Um, And AI can analyze your tax returns and your financial statements, things like that. But I would suggest strongly that you do not put your contact information with it. So if you're going to upload your tax return or upload your financial statements to AI that you're using, then make sure you fold or cut off the contact information before you load it up into AI so that AI doesn't have it, because AI uses everything that you put into it for training purposes, and it could become available and be used for other people out there. So that's why you want to be careful of that. Also, I would suggest that if you're going to do things like that, it's probably best to pay for AI, either like Copilot comes with Microsoft. So if you're already paying for it, you got it. I haven't used it a whole lot. I use it in my email, my Outlook email a ton. But I haven't used it like for searching so much. Gemini is good, and but pay for it, preferably. I mean, it's free, right? I mean, definitely the free sides to it. But if you're going to do it for these types of things, then definitely pay for it. Or Chat GPT is also a great one as well. I probably use that one more for work than anything. Gemini I use more for on the personal side. But either way, if you pay for them, then you can lock it down to where it does not use your data and your questions and so forth for learning purposes. So you use what it's learning out there. You get to use it within your system, but because you pay for it and you lock it down, what you put in there is not supposed to go out to be learned. Okay. And doing your taxes definitely can help you out with financial records. AI is built into QuickBooks, and AI is being built into all these other bookkeeping systems. But I do always suggest that you have, if you're a business, have somebody else do your tax return for you, an accountant, okay, someone that's an expert at it, just because there are things that if that takes what do they call it in the AI world? We call it human in the loop. And that even holds true for software. Okay. Accountants use software, right, as well, right, to do taxes. So, but it's the human in the loop that knows the advantages and disadvantages of taking this versus that. Okay. And if you do it yourself, it could cost you thousands of dollars. And in the past, I've helped people where they did their own taxes, found out that they missed certain credits and missed thousands of dollars, and actually had to have their previous tax returns amended in order to get that money back from the government. But you can only amend back so far. So anything before that, you're just out the money. Okay. So that's a good one. Let's see here. Hey, Steve, so you have a question about sales tax, collecting sales tax from online sales in multiple states. How do I pay those in? Oh, yeah, absolutely. Good question. So, uh, if you are collecting sales tax from other states, you have to actually have a sales tax account with those states if you are collecting sales tax from those states. And therefore, you'd go onto their website, like in Pennsylvania, it's called MyPath. Each state would have their own. You'd have to go onto their website, register an account with them, get a sales tax license, and then pay the sales tax to that state. Now, with that said, there are certain rules and certain what I would say dollar thresholds as to whether you even have to collect sales tax from those states. So um, Pennsylvania's rule is it $10,000? I think it's more than $10,000. So Pennsylvania's rule is if a business such as Oriental Trading sells into Pennsylvania, okay, you buy on their website, and then they're going to ship it to Pennsylvania. They're large enough, they have enough sales in Pennsylvania by which by law they're above that threshold, they have to collect sales tax. But then you take a smaller business, and I can't think of what it's called right now, but there's like a photography type of business up in New York that I've known several people, for some reason, they found out about this company. They have really good prices, good products. They buy from them, they ship it free. But they don't sell enough into the state of Pennsylvania. So they're under this threshold whereby they don't have to collect sales tax from you when you buy it in Pennsylvania. And that's where your website, if you have a sales tax uh, program built into your website, then it should know whether to charge sales tax or whether not to charge sales tax. Of course, your local SBDC can help you out with that as well, trying to figure that out. I've never dove deep into every single state, but definitely more than glad for any of you and your SBDC consultant, wherever you're located at, right? Definitely should be able to look into certain states and say, okay, what are these rules and what do you have to do to comply with that rule if you're going to sell into that particular state? Hope that helped out some. Becky, is the accounting for a nonprofit similar to a for-profit? I teach CPR, AED, and first aid. I want to receive donations to help financially challenged to get trained. Taxes for purchases. Okay, so nonprofits and for-profits are taxed differently, but at the same time, you still do the foundation points, which is tracking your income and tracking your expenses. The nonprofit is definitely, I'm trying to think here. I don't really dive into nonprofits. And so nonprofits don't pay taxes, I don't believe. Like I said, I don't dive into nonprofits. Unless it's sales tax or something or employer taxes, then they have those taxes they have to deal with, but there's not I don't think there's an income tax for nonprofits. It's been a long time since I've dealt with that. So, what is the advantage of one versus the other? Nonprofits have roles to become a nonprofit. You have to be like community oriented, or what you do has to be for the benefit of the community or the world. Okay. Whereas a for-profit, you're fulfilling a need. I understand that as a for-profit, but ultimately you're doing it for yourself. Okay. You're not necessarily trying to help and better your community or help and better the world. Okay. I think there's two different separations there. I want to receive donations. Yeah, so as a nonprofit, you receive donations, and that's tax deductible by the person that's given the money to the nonprofit. A for-profit can get donations as well. I've seen a couple people out there ask for money. There's a website called GoFundMe, okay, where you can ask for money on there, and there's other types of websites like this where you fund business programs. But those, because you're giving money to a for-profit, it is not tax deductible for the individual. So if you try that as a for-profit asking for money, just make it very clear that your contributions are not tax deductible. Okay. A lot of people don't know that. Like if you are trying to help someone on GoFundMe that had their house burned down sadly or something happened, a lot of people think that when they donate money to those individuals that they can then write that off on their tax return. You can't do that because it's not that person you're giving money to is not a nonprofit organization. Good. Someone's saying, can you please send us replays, and hopefully he will get to the AI section on this presentation. So the replays can be found on our YouTube page. If you do a search for PennWest Clarion SBDC, let me see what it comes up as real quick here. Get a second here. And so I just did a search for PennWest Clarion SBDC, and it came up here with, it's called PennWest Clarion Small Business Development Center. So if you literally were typing that the whole way out, PennWest is all one word, and then Clarion Small Business Development Center. If you go there and you click on the playlist button, and then once you're in the playlist button, there are 4 different playlists. There's one called Real Talk for Small Businesses series. There is our Pennsylvania tax series, which is well attended. There is the Tax Talk with Corry. And then there's also a Clarion, it's just one video, I guess, that they put into a playlist. So that one really doesn't matter. But the other three are ones where there's multiple videos that you can watch. So check out our YouTube page, look at our other tax talks as well. Okay. Let me see here. Okay, so sorry, James, I see you're asking about, can you please repeat again? I'm just kind of working down through the chat, so I just got to it, so I really have no idea what you're talking about there, but that's okay. Let me see here. I'm gonna allow people to talk here, and you can just kind of speak over because I'm not sure whether you had your thing in the chat here that you didn't have any questions and so forth. So I'm just kind of allowing everybody to unmute themselves. And if I miss somebody and you want to unmute yourself, feel free to uh, put it in the chat or something and let me know. So I might have got most people. So if anyone has any questions, feel free to unmute yourself and ask your question. Okay, I do see a couple things here in the Q&A. I missed that there's a Q&A section here as well. Good statement here. Many startups fail due to foolish mistakes. Yeah, absolutely. That's probably the biggest reason why businesses fail is we make mistakes, and hopefully we can figure out a way to correct it. I myself as a business owner, I've made a lot of mistakes over the years, and I just hope that I can correct it, and people will be decent about it, and give me another chance. I hear people go to restaurants and they're like, they went to this restaurant lots of times and they get one bad meal and they're like, well, I'm never going back there again. I'm like, really? One time and you're gonna like totally boycott that restaurant? That's just crazy. Okay. Even when I make food at home, I don't always make it good, right? Yet people give me second chances. So just remember that when it comes to our small businesses and any business really. So why doesn't anyone, especially SCORE, have an ABC 1, 2, 3 approach for startups? Okay. That's a good question. So I can't talk about like SCORE at all, since I'm not SCORE, and I can't talk about any other organization, but I'll talk about the SBDC in general. Um, for those that are looking to start businesses, we have a webinar called The First Steps to Starting a Small Business, and multiple centers across the state offer it, and you can attend any of them. If you go to that website that I showed you earlier, pasbdc.org, you can find every First Steps to Starting a Small Business training. And ourselves, we offer it once a month on a Tuesday afternoon, once a month on a Thursday evening, and once a month on a Saturday. So we try to make it available to everybody. And then that webinar takes anywhere from like 2 to 3 hours. We allow, I think, something like 3 to 3.5 hours for it, but normally 2 to 3 hours. And it's like a step-by-step approach for starting a business. Okay. So if you haven't attended one, and even if you're kind of a new business, I would say definitely attend it, see what you might have missed along the run that you've been on. But it follows it like step by step to start a business. It talks about registrations, location, marketing, human resources, business plans, loans. Federal taxes, state taxes, sales taxes. I mean, it talks about all kinds of stuff, and it's a nice format so that we teach it as a webinar or sometimes in person. Our Tuesday afternoons are in person as well. And because we follow a PowerPoint presentation, it kind of helps us make sure we cover everything with you. And then from there, when you're talking one-on-one with people, it's kind of hard to do a step-by-step kind of thing. Normally what it is when I talk to somebody, and I just had a meeting with someone this morning that I've had multiple meetings with, but after we accomplished this one task that we knew we had to accomplish today, I said, okay, what else are we missing? So as an example, I helped them with sales tax. I said, have you registered your fictitious name as a sole proprietorship? Have you obtained your EIN number? No, no. Okay, let's do that. Let's get it done right now. We were in a video meeting and he was sharing his screen with me. So we submitted for sales tax. We got his EIN number. And the fictitious name, if you're a veteran, by the way, with some of these state registrations, it costs money. If you're a veteran and you upload your documents that to prove that, you don't actually have to pay that fee. So we didn't complete the fictitious name that cost $70 because he's a veteran, so he was not at home. So when he goes home, he has to, take a picture of it, save it, and then if he can't do it himself, we'll do it again. A video meeting where I'll help him get that uploaded, and then he'll have to, then we'll finish submitting for that fictitious name registration that we're doing. So when we're talking more one-on-one, it's like really open-ended. It's like we're trying to find out what are your needs and how can we help you, and then we continue doing that until kind of it quiets down and it looks like you don't need help anymore. Okay, so it is kind of hard to do ABC 1, 2, 3 unless you attend that first steps training. With that also said, check out that pasbdc.org website for training. There is so many different webinars from marketing and HR to QuickBooks. I'm a QuickBooks instructor, so I have a very in-depth, probably one of the most in-depth trainings that you're going to find across the state of Pennsylvania for QuickBooks online. So check that out. There is a fee for that one because it is such a major training. But when you see the lump sum fee, it's for 4 sessions, 2 hours each. When you break it down, it's like $37.50 for a 2-hour session. Less expensive than the other QuickBooks trainings you'll find on our pasbdc.org website. But also, you want to learn how to use Canva? I've seen Canva trainings on there. So definitely check that out. So much learning for you to do. And if we all have a passion for our own business and owning our own business, we're going to try to learn as much as we can. I'm an accountant by trade, yet I just started going through some accounting training through and for QuickBooks Online. And it's starting out the very basics of it, like terminology of accounting, which I know a lot of, but there's a few on there that I'm like, what is that? Something I didn't hear. I haven't heard that terminology before. So I took my time and I looked at it. Okay. So when we have that passion, we'll continue wanting to learn. So thank you for putting that out there in the Q&A. Okay, we have about 9 more minutes. Is there anybody can unmute themselves or use the Q&A if you see that button, or use the chat button. I don't think I missed any questions. If I did, please let me know. So I'm just taking a quick look here to see if I did miss anything. Okay, it looks like I got everything. So I'm not getting off yet. I'm not, you can leave, but I'm not leaving. I'm here. So let's talk a little bit about AI until somebody unmutes themselves or types in their question. Let's talk a little bit more about AI. AI is absolutely amazing. For those of you that use email constantly, if you're using like Microsoft Outlook, and if you notice that there's Copilot in your Microsoft Outlook, it can help you reply to emails. It can help you compose emails. You don't have to worry necessarily about upper and lowercase and spelling and punctuation. It'll normally fix that stuff for you if you're using it within your Outlook. When you are replying to an email in Outlook, it will read that particular email that you tell it to reply to, and it will come up with a reply based on everything in that email chain. You then, of course, can edit it in every way that you see fit before you send it to the person. It's just giving you an idea, okay? Don't let AI take over everything for you. You've got to keep that human in the loop. As for doing research, AI is going to probably, they're saying that it's going to become more popular than going to a search engine like Bing or Yahoo or Google. And many of you may already have AI built into your Google searches now. So you type questions now is what you do. Instead of just typing a few words, type out your thought, okay, into AI or into Google search if it's utilizing AI. Type out your thought, even if it's a paragraph long. Give it as much information to go with, and then it replies back to you. If you haven't used it already, it replies back to you in sentence form, paragraph form. and it's easier to understand compared to like going to like Google or any other search engine and doing a search. And the old fashioned way was you had to click on link after link after link after link and read through the website trying to find the answer, okay, that you're looking for. And it takes you, it could take you a long time to find that answer. Here AI does that work for you. It goes out to all these websites within split seconds and brings back the information in a paragraph that we can read and understand. AI on your phone. You know, I have Gemini app on my phone. I have Chat GPT app on my phone. I use both of those. One of those two, I can't remember which one it was, but one of those I found this button where I tap on it instead of typing. I tap on it and I read to it, right? But it's part of the app itself, and it speaks back to me, and it didn't even sound like AI speaking back to me. It sounded like a real person. It was like I thought it was cool. I let my kids listen to it, 14 and 17 years old. I let them listen to it, and they said it's scary. Okay, that it sounded like that. It sounded like a real person, did not sound like a robot whatsoever. So it's pretty cool. Let me see. I'm going to quit on the AI for a moment, and because I did get two things come through here. So one says, does your QuickBooks class talk about syncing up inventory with an outside website? In my case, Shopify. Right now, I'm doing double entries, so I have semi-accurate inventory. I sell both on QB and Shopify using inventory counts on QB. So we will cover inventory and we would cover how to do the syncing. We're not going to dive really deep into connecting different apps, if you want to call them, like Shopify or Square. I mean, we'll show how to do that on a general scale, but we can't dive deep into each one because each one is so different. With that said, we do have a couple of QuickBooks specialists across the state of Pennsylvania that can probably help you. I'm working with somebody right now that is using Square. Okay. And we're running into a little bit of issues because, well, one, I haven't dove into Square for quite some time. But then QuickBooks Online just went through a major update. I think everybody should have their major update by now. They've been rolling it out to customers. And so because of the updated changes, some of the research that I can do, it's giving me old information. It takes more work to find the new information, but I've been helping this person connect their Square to their QuickBooks and everything involved with it, not just the basic connection, but getting it to line up correctly. Okay. So there's a definite possibility that a consultant across the state of Pennsylvania can help you. Over on the eastern side, I believe her name is Sharima, and she's a QuickBooks specialist as well. So if with your local SBDC, if you can't find the contact person to help with this, then reach out to me. I'll put my email, by the way, into the chat in case you don't have it um, for everybody here. And then you can always reach out to me and I can get you connected with somebody. And then over here, hi Corey, I have a business currently, and I'm looking to start a new one. Awesome. I was able to obtain my EIN from the feds for Pennsylvania registration. Do you know if I'm able to use my current logins, or do I need to have a completely different one for my business? Should I keep them all separate? So yes, from my understanding, if you have two separate businesses, you're going to have two separate logins. When I log into, say, MyPath, I see one business in there. I haven't seen how we can separate that. Your Keystone login for Pennsylvania, I don't recall seeing anything in there to be able to have two companies in there. I mean, what I would say is go into those and explore around, clicking on all those buttons, right? For MyPath and Keystone login. and see if there's a place to add a company. If you feel uncomfortable doing it, then you and a consultant could maybe do it together. You share your screen with them by video or meet with them in person and kind of explore it together. I mean, even just doing some research as well. Your SBDC consultant may do some research and even may reach out to my path and say, hey, is this possible? Or reach out to the Keystone login people and say, hey, is this possible? That's probably the faster route to do it that I would probably do if I was doing it for you or doing it with you. We don't do everything for you, we do it with you. Okay. So Holly's saying, which is true here, my path shows shows both her personal and her business. So one could be okay. And for business and personal, yes, but can we have more than one business in that one? I'm not sure about that. I'm not sure. But yes, personal and business definitely can be combined. Hope, hope that helps out. Okay, well, we are out of time, everybody. I hope that you enjoyed today. I hope that you learned something. If you take away one thing, like my email address, I think you learned something. I think it would be worthwhile to you. I appreciate your thoughts and your questions that you posed today. And we will be back here next month. If I look at my calendar, I can tell you right now when we will be back. And I believe this link, the same link that you're using, should still work next month. We'll be back on Wednesday, December 17th, that we will be back. I'm not sure what that tax talk tip is. You'll have to check it out there on our website or something. It should be on pasbdc.org right now. And then we're also planning for January through June of next year to continue with this. So if you like coming to this and learning from it, definitely. There will be a new link though, so watch for a new registration process. Same registration process, but you have to go through the registration in January because the link will be a new link starting in January. Okay, take care, everyone. We'll see ya. Bye-bye.